Hi, this is Brian Dolan from the law firm Pepper Hamilton. Pepper has been a sponsor of iGlobal's Independent Sponsor Summit in New York City for the last couple of years. I'm joined today by Pepper partner John Rogers. We wanted to catch up with John before he spoke in front of the audience next week at this year's summit on April 20th. John, thanks for taking the time again. What are you seeing in this space right now?
I think what we're seeing is a much increased competitive landscape for independent sponsors. And if you look at overall M&A deal, private equity M&A deal volumes between 2015 and 2016, overall volumes were probably down. But if you look at the lower middle market, where independent sponsors play, deal volume is pretty constant. But I think the one interesting development is that we saw overall deal value in that space over the same amount of deals increased by 20-something%. Whereas the multiple for lower middle market deals generally was around 5 times. I think we really saw it break out in 2016 to above 6. And I think it's making it more challenging for independent sponsors to go out and win auctions. At the same time, the lower middle markets become more efficient in terms of investment bankers effectively marketing deals. And you have a lot of PE shops that are, looking at smaller deals because the regular middle market is priced in a challenging manner. And at the same time, the strategies become, we'll overpay for a platform acquisition, but we need to bring down the cost of entry by doing more affordable add-ons, and that means more lower middle market deals. So there's just a lot more competition in the space, and the pricing has become very challenging for independent sponsors. And I think that's the dominant theme that we're seeing.
Are there any regulatory issues that need to be focused on?
Oh, absolutely. I think what we're seeing on the regulatory front, over the last couple of years, we've been seeing a more active SEC pronouncements in trying to crack down on unregistered broker-dealers. And, there's always been a concern in the independent sponsor space that their compensation can be viewed as broker-dealer compensation. And then last year we had the Blackstreet Capital case, which where the SEC really came out at a PE shop for charging investment banking fees without being a registered broker-dealer. The good news is that everything we've seen from the change in administration points to a regulatory landscape that's more focused on making the capital markets more efficient than looking for opportunities to have first impression enforcement cases. So we think there's going to be a little bit of a retreat from the SEC's focus on enforcement in the broker-dealer space, and I think that should put a lot of independent sponsors at ease about the broker-dealer issue. The other point I think to note on the regulatory front is really, while we might be a ways away from actually getting any type of comprehensive tax reform package passed, I think independent sponsors start thinking about how it might impact their deals and how they might impact structuring. The upshot is that there's a likelihood that the corporate form might be more amenable to use for independent sponsor deals, and that has certain structuring concerns.
Thanks, John. Are you seeing any developments in how independent deals are being financed right now?
We're seeing, there's still a lot of dry powder from capital providers, whether you are a MES fund or SBIC fund or an equity backer of independent sponsors. The things that we're seeing an incredible amount of activity in is new family office platforms that are being formed to do direct deals, and a lot of them are being formed to back independent sponsors. We're running into more and more of these.
For our listeners who are interested in more information on independent sponsors or general trends in private equity right now, please visit Pepper's private equity section on our website, which is www.pepperlaw.com.